What up, everybody? Welcome back to another episode of the SATS Show. Oh, it's nice to be back here. It's Friday. Should we do an extra long episode? Hang out. We'll wait for this ETF to get released. Just kidding. I don't know. Will the ETF get released today during the show? Well, wouldn't that be amazing? I can pull up the chart if it starts to go crazy and we start to see a crazy God candle. I'll pull up the chart and we'll watch it and bask in the glory. Okay? But if not, no big deal. We're staying to keep stacking. What up, Leonard? Leonard, I want to go try that taco shop. Let me know if you have time after the show to go try out that taco shop that we talked about. All right. So today is the 5th, and the window for the ETF approval is between the 5th and the 9th. So it can happen today. It can happen over the weekend. Some people are saying Monday. Some people were saying Friday. It's still early. Okay, the day is not over yet. Maybe. What time is the stock market closed? Anyway, so we don't know. We don't know when it gets approved. We don't know when it gets released. Okay. Whatever happens, we're going to continue to stack because even though the ETF is uncertain and we can't pinpoint the exact time when it's going to happen, we can definitely verify that the halving will happen every 4 years, and we have a halving coming up. So don't worry. I'm still holding strong on my bet, says Hard Huddle. Welcome, Hard Huddle, to the show. Welcome, Leonard. Round of applause from the live studio audience. If you want tickets to the live studio audience, let me know in the chat, and I'll hook you up with some tickets to come and watch the recording of the show live. And you too can be part of the live studio audience. Round of applause. Let's go. All right, guys. Let's get the show started with the first thing we like to do here on the show, which is get a little gauge on what Bitcoin is doing today by doing the SATS strength. All right, I'm trying to fine-tune the volume of things here. Today, the price of Bitcoin right now, pre-ETF Bitcoin price is $43,759. There we go. This weekend or next week for sure. I hope so, dude. It's gotta happen. If they delay it, I'm torn. We'll talk about that. But the main topic of today's show is going to be everything is going to zero against Bitcoin anyway. So we're going to watch a cool little thing during the Why We Stack segment. But first, let's figure out how many Satoshis we can buy for a single dollar today. What kind of a deal are you getting? You're going to get a super good deal. You're able to buy right now 2,284 Satoshis for a single US dollar. What the heck is a Satoshi? Oh, cool. All right, Leonard. Tacos are definitely more certain than Bitcoin ETF approval, right? Maybe. Okay. The question becomes, will we get tacos before or after the Bitcoin ETF? Anyway, so it's important to highlight that a Satoshi is a fraction of a Bitcoin. You can have a whole Bitcoin if you accumulate 100 million Satoshis. Okay, so it's important to highlight that because you don't have to go buy a $43,790 Bitcoin all in one shot, all at once. You can start accumulating a Bitcoin a little slow and steady, whatever you feel comfortable with, depending on your level of knowledge and your level of comfort and your level of conviction to the asset. But after you see what I'm going to show you today during the Why We Stack segment, you're going to be more convicted. You're going to be more receptive to investing more in Bitcoin and preserving your wealth and saving in Bitcoin. So, let's say you're walking down the street, minding your own business. You look down, you see a penny, you pick it up, and all the day you could have 23 Satoshis. We've been kind of stuck on 23 Satoshis for a while, guys. Been kind of stuck at 23 Satoshis for a while. This is also important to highlight because when we first started this show, if you go back to our first episode, we're getting like 37, close to 40 Satoshis for a single penny. And now we're only getting about 22.83 Satoshis, 23 Satoshis, 22 Satoshis, whatever you want to call it. When Bitcoin hits $1 million, and it will, just don't know when, one cent will be equal to 1 Satoshi. All right, it's pretty wild. We'll have the the sat cent parity. It's pretty crazy. It's pretty crazy. All right. I'm surprised that we're so far into the show this morning and we haven't seen a pump yet, because usually Bitcoin goes up like at 11:30 before the show is coming on. So I'm always buying the tops during the show. But today it looks like it's kind of holding, trying to make its way up, but maybe it's going to dip down. We'll see what happens. Okay, so let's jump into the next segment of the show, which we like to call Why We Stack. And first of all, let's get an idea of what the amount of debt we're spending, the amount of debt that the US is in, right? $34 trillion. And $34 trillion is really hard to visualize. It's hard to visualize even $1 trillion. So I was browsing through X, and you know how X goes. You end up finding cool stuff that you want to share with your friends. So today we're going to share that. We're going to look through this little video that shows you what it is, that gives you a better idea of what $1 trillion might look like, okay? So let me show you that real quick on my screen. Let's check that out. So there it is. What $1 trillion in cash would look like. What up, Boise? Boise in the house. Round of applause from the live studio audience for Boise. Let's go. Hey, thanks for smashing the like, guys. Thanks for doing that. All right. Here we go. I'm going to let it play through. I'm going to pause it so I can talk over it. Okay, so let's let it play. Look at that. That's $100 is one bill. $10,000 in $100 bills. It's like a little stack. It's a nice little stack, right? Look at that. $1 million. So it looks like. It's like the size. I mean, it's like I think it's scaled to be the size of that $100 bill, right? Then we go here. That's what $10 million would look like. That's the average size briefcase there for scale. So you couldn't really take $10 million in a briefcase, right? You have to, you just couldn't, right? There's too much paper. Then we jump up to $100 million, and we got a guy sitting there next to it to give you scale. It's about as big as about half of a mattress, but twice as tall as a mattress. And then we get to wow, $1 billion. $1 billion. It's about the size of I don't know. It's probably bigger than the car, not as tall. Yeah, way bigger than a car for sure. Maybe like a truck. And then let's see, that's 1 billion. And now this guy's sitting on top of it. Jeez, it looks like a basketball court, maybe. Nah, maybe small, like half court. $10 billion worth of Bitcoin. Sorry, $10 billion worth of $100 bills there. Who stacks in ones? These are hundreds. This is stacks of $100 bills to make $10 billion. And finally, what is this? 100? Is this a trillion? No, that's $100 billion. $100 billion is bigger than the semi truck. Not the. Yeah, I guess you can include the trailer, but like just the actual truck, the semi truck. For scale, it's about twice as tall as more than twice as high as a semi truck. And that's a ton. It's probably literally more than a ton of cash right there. That's so much cash. Okay, $100 billion. Okay, and now we have. Look at this. This is incredible. Holy smokes! Holy $1 trillion. Right? That's how ginormous this is. Right? That's just one. Okay. Now imagine that times 34 trillion. That's how much in debt the United States government is in, right? That's how much in debt we are in debt to ourselves, I guess you could say, right? But not really. Okay. So all of that to show you in a different way to illustrate the point that the debt is insolvent, that we can no longer pay off that debt, that interest on that debt. because there's not enough money in existence to pay off the actual debt. So you have to keep making it in order to pay, in order to continue paying the interest on it. You have to continue to create money. And when they do that, they devalue your dollars and they debase everything that's based in dollars. It loses purchasing power. Okay. Now we're gonna jump into the next little example, the next little thing I found on the interwebs that I wanted to share with you guys. And it goes along the same lines, right? It's kind of the topic of today's episode is everything is going to zero against Bitcoin. And that's exactly why. Because as they continue to print money and as banks continue to issue debt, they create money. They expand the money supply. And when they expand the money supply, your dollars lose purchasing power. Okay? Just because you have a bottle of wine, if you add enough water to make 2 bottles of wine, it doesn't make your wine more potent. It dilutes it, right? So you have a lot less bang for your buck if you're turning 1 bottle of wine into 2 bottles of wine, unless you're Jesus, right? Then it's okay because you can do that kind of stuff, right? But that said, let's look at this other thing I was going to share with you guys today. And this is pretty incredible. It's pretty wild, okay? So when your friends tell you, "Oh no, Bitcoin is too scary, it's too volatile, it's too risky," right? Ooh, I love that one. It's too risky. Okay. Well, let's get started with this little presentation. Okay. So let's just say you're saving in dollars, right? Watch. That's the exact thing that's happening as the money's being printed. We're looking at this like in the inverse. Okay. As the money's being printed, it takes more and more weaker dollars. Actually, in this case your dollar buys less and less satoshis over time, right? Like back in 2011, you could buy a lot more satoshis, right, than you could in 2023, right? So it's showing you that if you compare the dollar versus Bitcoin, the dollar is losing purchasing power against Bitcoin. Okay, that's just example 1. And you might say, well, that's okay because I don't save in dollars. Okay, I don't save in dollars. I invest, and I invested in Tesla. Okay, and although it looks like you might have been making money in Tesla, when you compare it to the debasing dollar, when you compare Tesla / dollar, it might look like you're profiting. It might look like you're gaining dollar value, gaining dollar units, right? You might be going up, your investment might be going up in dollar units, but those dollar units are getting devalued so fast that it doesn't matter that your gains are a certain amount. Like unless your gains are more than 10%, more than maybe even 15%, your true rate of inflation is and when you factor in the true rate of inflation, you're actually still losing against inflation unless you're doing over 10%, right? So that's Tesla, right? One of the best performing stocks in the stock market, right? Let's see what we have next. We have Bank of America, right? Same thing. When you compare Bank of America against Bitcoin, it's losing value, right? You can buy more and more Bank of America stock or Bank of America shares for less and less Bitcoin, right? So again, it's losing value against Bitcoin over time, right? And it's pretty wild. So that's why the title of this episode is "Everything is Going to Zero Against Bitcoin." Okay, we're gonna keep it going. See what else we got in this video. We got J.P. Morgan, big bank, right? J.P. Morgan is also losing against Bitcoin, right? So all this to show you that if you were just to invest your money in Bitcoin since the beginning, you'd be a lot better off than these institutions and than saving in these stocks, right? And I know it's retrospect, right? But still, Amazon, one of the best performing stocks you could own, you would be doing pretty good, right? You might be beating inflation by a little bit, but you wouldn't be beating it by as much as if you had just bought Bitcoin, took custody, and held on. That's all you had to do, right? No trading, no bunch of random other stuff. Just continue to accumulate, continue to hold, and you'll be a lot better off than investing in any of these companies that are based in the fiat infrastructure, right? It's just a different way for them to manipulate the money, right? And continue to take the wealth from you. They're just taking the wealth from you a little bit slower, and they're giving you the appearance that your monetary units are going up, but not as much as inflation. So you're still losing, for the most part. That's Amazon. That's the U.S. 10-year. So you can lend them. You can lend the government money, and they will give you a return, a guaranteed return, after 10 years, right? But let's say that your rate of return is like 4 or 5%. Lend me your money for 10 years, and after 10 years, I'll give you 5%. I'll give you your money back plus 5%. Okay. Even though inflation, the real rate of inflation might be like 10% for those 5 years, right? You've been losing the whole time, and when you get your money back, you do get 5% more of the cash that you invested, right? But you can't buy anything with it. You can, but you can buy a lot less with it, right? You would have been a lot better off if you had just invested it in Bitcoin. Again, same thing, same concept. We're seeing a pattern here, right? We're seeing a pattern here. Okay, so what's more risky, right? Yeah, it came up a little bit because they've been raising the interest rate, but still, once they turn the money printers back on, because the housing market starts to collapse, this is going to continue to trend down, and your Bitcoin will continue to get more expensive. Here we go. So that's Vanguard gold. Actually, so Vanguard is like an investment like an investment option. Still, I don't know if we go back on this. Similar chart, right? Going down against Bitcoin, right? And then we go to gold. Gold also trending down, continues to go down against Bitcoin, right? So you can buy, what is it, an ounce of gold for, what is it, SATS? Oh yeah, for what's it, 1, 2, 3, 1, 2, 3, or 20,000, around 30,000 SATS. Is that right? Yeah. No, that's 10,000 SATS maybe. About 10,000 SATS for an ounce of gold. And you would have to pay a lot more SATS before, right? So it's showing you that it's trending down, even with gold. That's supposed to be like the best way to preserve wealth, but still, it's not, right? Because even gold has a rate of inflation, and if the price of gold goes high enough, gold miners can always go and dig some more up and sell it and increase the supply. So you're still subject to inflation. It's not as high as a dollar's inflation, but there's still inflation there. Maybe over the span of like 30 years, your investment will in essence go down by half in the span of 30 years. So it still leaks. It doesn't leak as much as cash, but it still leaks. Okay, because it still has inflation. Okay, the only thing that doesn't have inflation, the only thing that's fixed as far as the supply goes in the history of humanity is Bitcoin. Okay, you can't make any more than 21 million, and that's what's the key. That's what's key. That's why everything else is losing to it. Here we go. Let's see. Let's go to the next one, or what it might be. S&P 500 still. S&P 500, a lot of people invest in that. And you know the problem with the S&P 500 is that even though there's 500 companies in there, it's not like, no way, J-Dub in the house with the Stack Against the Machine shirt. Let's go, J-Dub. Woo! Thanks, dude. Thanks for doing that. Very nice. The thing with the S&P 500 is, if you look at it, the companies in the S&P 500, maybe not all of them are like winners, guys, right? So you're taking the top companies in the stock index, in the market, and you're taking people's retirement funds, people's investments that let like a vendor manage it for them. And what ends up happening is, the way they manage these portfolios, they will take and I'm gonna jump on screen right here so you guys can see what I'm talking about. Is that gonna work? Let's see. see if this works. There I am. Hello. You take these portfolios and they're going to be selling the winners to cover the losers. Okay. So you have all this tremendous amount of money that's managed by funds and the people that are contributing that money are not managing individual stocks. They just invest into the whole S&P 500, right? And so what happens is you have all these companies that are what I would consider zombie companies, right? And their only reason they're still in existence is because they're bundled in with the companies that really make the money, right? Like the magnificent whatever 7 or 10, whatever the top companies are, like that are making all the real money in the S&P 500, that are holding up basically the whole stock market, right? So people invest in these different companies, and as the companies that are actually making money and improving your portfolio make a profit, they'll sell some of those companies to buy more shares of the companies that are not doing so well, to quote unquote rebalance the portfolio. And what that does is it just gives money to companies that don't even have really good business models. They probably shouldn't even be in business in the first place, right? But since there's so much liquidity and the way the liquidity is being managed, they're able to basically continue to exist, even though they're not providing really good value, or their infrastructure is set up weird where they're barely making a profit, or maybe not even making a profit at all, right? They're just kind of holding on for dear life, not the way we hold on for dear life, but holding on for dear life to stay open with the hopes of a bigger company acquiring them, right? And making their money on the sale of that company, and then they can move on to start another company, right? But the way that this is structured, it ends up allowing these companies to continue to exist longer than they probably should have, based on if it was a true open business, right? Anyway, let's keep going. That's a little bit too much for this episode. What else is on here? Let's see. Oil versus Bitcoin is also going down. That's pretty cool, right? So you can buy a barrel of oil for what, 300,000 sats now, where before it was like a lot more. Pretty intense. Okay. What else? Let's see. We got Berkshire Hathaway. Oh yeah, that's right. The euro is also going down against Bitcoin. I'm telling you, it's pretty wild. You get 4,000 sats for €1. Not bad. I could go for a euro right now. A lamb euro. Apple versus Bitcoin. Even Apple, one of the best performing companies in the stock market, is still not performing as well as Bitcoin. It's still losing against Bitcoin, right? So, yeah, they were good investments when there wasn't any other option. But now that Bitcoin is an option, Bitcoin is where you need to be. Visa, same thing. I'm seeing how that play out. Nvidia, this company has been doing fantastic, but still, even then, yes, it's still doing pretty good against Bitcoin, but still, it's trending down, right? So it's pretty insane. Silver, for sure. Silver's dead. Silver's for rings and stuff. Coca-Cola even. Dang. NASDAQ. Yep. The US dollar. Okay, that's it. It's repeating. But yeah. So that's all. That's kind of what some of the charts I wanted to show you guys today for the Why We Stack segment. Just to show you that when you start comparing things, when you start to use Bitcoin as your base layer and get out of that fiat matrix, then your perspective changes, right? Everything is based on how many sats things cost. Then you can see that it costs you less sats for the things you want to do when you're on the Bitcoin standard than when you're on the dollar. All stocks suck against Bitcoin. What up, Eddie? Let's go. Eddie coming in with the epic comment of the day. It's true. It's true. Because people don't understand, or people don't take into account the real rate of inflation, right? So even if you're making 5% on a stock, or 7%, 8% even, you're still losing in terms of the real rate of inflation. So if the real rate of inflation is 10% and your stock is making you 7%, you're still 3% off, right? You're still losing 3% a year, which is wild. On top of that, there's the opportunity cost of not having those funds, of not having that value stored in Bitcoin. The opportunity cost is way more than 3% that you're losing just by keeping it in that stock or whatever. right? Because the upside potential of Bitcoin is so much that you're losing. Oh, let's go. We got a little pump going. We got a little pump up to 40. It pumped to like 400. Very cool. I should have been buying before this pump. Anyway, maybe that's just a big pump before the dip. Who cares? Doesn't matter. Let's jump into the next segment of the show, which we like to call the Stack Recap, because we don't only talk about buying Bitcoin here every day, Monday through Friday at 12:30 p.m. Pacific Standard Time, 3:30 Eastern. We also stack it every day, Monday through Friday, here. One stack at a time. Slow and steady. We grow our stack. Here we go. Overall, the stack for the show is at 11.3 million Satoshis, 0.11312603 Bitcoin. We've spent $3,745 to accumulate this Bitcoin. And if we were to go and buy that Bitcoin today, it would cost us $4,996. Okay? I know it shows it as a gain or loss here, but this is not a gain or loss. This is a reflection of how much the dollar has weakened since we bought our Bitcoin, since we've been stacking. Okay? Because in order to buy the same amount of Satoshis today, I would need to pay 33.4% more US dollars for the same amount of Satoshis. That's telling you, of course, that the purchasing power of the dollar is getting lower. You're losing purchasing power, so you need more weaker dollars to buy the same amount of assets or Satoshis or houses or cars or food, whatever you need. When the dollar is losing purchasing power, you're gonna need more of them to buy the same stuff just to get by. And unless you're getting a 10% raise every year, you're losing there too. So the only way to shield yourself is to put some of that value that you've been working so hard for into Bitcoin and get it outside of the inflation monster. What up, McLovin in the house? Round of applause from the live studio audience for McLovin. Let's go. Okay, so that's a stack for the cumulative year. So that's a stack for the whole show, and we've started to track 2024 differently, separately, just in case you're new to the show and you're thinking, well, I already missed it. No, you didn't miss it. We just started stacking for 2024. This is our new stack for 2024. It's part of the same stack, but we're tracking 2024 separately to motivate you to start stacking, even if you can only do $10 a day, $20 a day, $50 a week, $100 a month. You got to start somewhere. The idea here is to get off of zero, start owning some of this Bitcoin before the institutions come and gobble it all up, and you'll never have the opportunity to stack. Was it 22 sats per penny? 2,200 sats per dollar, right? All right. The rules for the stack here on the show are as follows. If the price of Bitcoin is above our average buy price, then we just buy $20 worth. If the price of Bitcoin is below our average buy price, then we buy a double stack with cheese, please. And that's going to be $40. If the price of Bitcoin is below our lowest purchase price for the year, in this case, $42,856, then we will do a 3x3. If you're familiar with the burger chain here in California called In-N-Out, a 3x3 is a burger with 3 patties and 3 cheese. So a triple stack. No, quadruple stack. Quadruple stack. If the price of Bitcoin drops below our all-time low purchase of 2024, then we'll do a 4x4. 4 meats, 4 cheeses, a quadruple stack. All right. But today, it looks like the price of Bitcoin is at, let's see, 44,000. It's pretty close, guys. I'm going to do a double stack. Okay? You guys okay with me doing a double stack? Double stack or single stack? Put it in the chat. Okay? If it's below the average buy price, I do a double stack. I think it's close enough. I think I want to do a double stack today, guys. Let's do a double stack. Double stack it is. Double stack it is. All right. Only one thing left to do, and that is, it's time. Stack some SATS. Mark Double. Mr. Android in the house. What up? Welcome back. Thanks for tuning in. Mr. Android, we're going to do a little double stack today, guys. All right. I know. Don't burn me at the stake because I'm still using Swan. Okay? There's some controversy with Swan right now, but I don't care. All I care about is that I can buy SATs and take them off the exchange. At that point, my relationship with the exchange is done. Okay? Buy them however you need to get them off the exchange and into self-custody. All right, today we're gonna spend $40. We're gonna buy $40 worth of Bitcoin before it pumps up again. And let me get a screenshot of this before I hit the purchase button. Preview here. Preview. Stack against the machine, baby. Stacking against the machine means you're stacking SATs so that the government can't devalue your money. There we go. Cut the music. Drum roll, please. Okay. Should we wait for it? Should we wait for it? Oh, McLovin, Swan's doing I think a separate, I don't know exactly the full details of it, but I think Swan's doing a separate way to like manage people's Bitcoin. It's an option for like higher end customers that have a lot of money, where I think based on algorithms they'll take the funds and buy in and out of Bitcoin depending on like an algorithm that they have set up, right? Which sounds weird, but anyways, I'm not involved with any of that stuff, and that stuff won't affect me because I'm buying it and getting it off the exchange. Okay, that's all you got. That's all that you guys should be doing too. All right, so but wait for that. Well, that stack will finish eventually, but we can still add it to our spreadsheet for today's purchase. Let me go make a little note for today's episode. There we go. Gotta end that music, and once we stack, we chill. All right. Start queuing up the questions. If you guys have any questions for me before, while I'm doing this, while I'm taking my notes. Today's episode, 133. Dang. Still here after 133 episodes. Still stacking. Slow and steady. Wins the race. Okay? It's about the journey. All right, here we go. 1, 5. I cracked myself up. 44,000. Oh, it actually did. It actually did end up being less than our previous buy. 44,000 and 56, which is what we got. And we spent $40. And what did we get? We got 0.000898885 Bitcoin. And that comes out to the stack for 2024 is now about 500,000 Satoshis. Almost 500,000 Satoshis. 409,288 Satoshis in 2024. Yes, we lost a little bit of we're so close. We're so the stack is so fresh. It's a fresh stack. We have done 5 buys. 1, 2, 3, 4, 5 buys. So it is gonna fluctuate into the gain and the loss. It doesn't matter. What matters here, and what matters on the other spreadsheet, is that the amount of Satoshis continues to go up. Okay. The only thing that matters is that the SAT count goes up. We don't care if the price of Bitcoin goes down. If the price of Bitcoin goes up, we're gonna stick to our DCA schedule and we're gonna buy, because as long as the SAT count goes up, you're getting ahead. Okay. Now let's look at the overall standings and add that to the overall standings for the whole bag for the show. These two amounts, this one's only counting for 2024, and this one's counting for the whole amount since the beginning of the show. So it's we're not double counting. Okay, don't add them together. This is the cumulative right here. Okay. Copy that here. All right. They tell us to self-custody and retail is a small part of Swan. That's why people are mad, because they're trying to grow into, Yeah. Bitcoiners don't like growth for some, yeah. That's an interesting take. It's crazy, right? That's cool, but how are they insolvent? That makes no sense. Who says they're insolvent? I buy my SATS no KYC, peer to peer. Try the updates. Growth is good. Swan is specific. Yeah, exactly. Yeah, like either way, for me, I'm using them as an exchange, right? And the service that I need from them, they do really well. And there's a benefit to buying with Swan is that you don't have to pay transaction fees when you're taking your stack into self custody. That is a big deal, right? Like right now, if you want to transmit some Bitcoin over to your cold storage, and you are like on Coinbase, for example, it's going to cost you anywhere from like $15 to $20 to transfer your coin off of the exchange, right? With Swan, once you accumulate your 0.0, I think it's 0.001, or 0.1, no 0.01. I forget what it is. About $300 worth of USD. They're gonna automatically withdraw it for you, and they don't charge you for that. So that's, I mean, $15 here and there. But if you're transferring SATs to your cold storage every couple weeks, every month, then as soon as they become cleared for transmission, then yeah, it's kind of a good deal. You're saving like $30 a month, possibly, right? That's $30 that you could be investing in SATs, right? So anyway, all right, let's keep it going. Okay, so we've added that, and let's go back up and check. The current standings for the whole stack is 11. Wait, is that right? Did I catch that? Are we over the hundreds already? 169. Okay, so. Oh yeah, it did. It went through. Okay, so 11,000. Yeah, through 1,000. 11.4 million SATs is our show bag. Okay, slow and steady. We're almost gonna break 5K worth of value, right? Worth of fiat, I guess you could say. But the goal here is not to sell. Okay, the goal here is just to continue to accumulate the SATs and keep it going. Again, if you're new, focus on this stack. Okay, it's small, it's generous. But we started this big stack just like we started this little stack. One day at a time, Monday through Friday. And if we can do it here on the show, if I could produce a whole show on my own while stacking SATs, you can stack SATs. Because that's the only thing you need to focus on. Don't get any distractions. Stack SATs. And it's very doable, very attainable. And you gotta get that done before hopefully before the ETFs happen. Okay, McClellan says 0.99 purchase fee is the only fee I've ever paid with Swan. No transfer fee ever. Exactly, McClellan. That's kind of worth it right there. It's kind of worth it right there. Their price is not exactly the same as Coinbase, but anyway, you're gonna get a similar price with like Strike and apps like that. And even Strike yourself to KYC. So at this point, it's just a means to an end, right? If in the end you have Bitcoin in your cold storage, you're doing it right. Okay, it doesn't matter how you get it. I mean, it does matter how you get it, but you know what I mean. All right, is that all we have? Is that all? All right, let's see. Let me go through these chats and see if I have anything to add. All right. Haven't tried the Ember app. I'll look into it, see what it does. Even if you had lots of SATs, it's free to withdraw to cold storage with Swan. Yep, Mr. Android is right. It's correct. Let's see. You mine Bitcoin from your phone? I don't mine Bitcoin from my phone. I do mine Bitcoin with ASICs though, like a boss. I do a little mining, a little hobby mining. Run a node as well. Let's see. What do you like for cold storage? I like Man, I have a Blockstream Jade that I haven't been able to work with my phone, and that sucks. What? So yeah. So I have off top. I have a Blockstream Jade that I haven't been able to work with my phone. I have a Trezor. I have a Cold Card. Those are pretty good. But my main one is probably my Trezor. What will Bitcoin's price be by the halving? Oh my gosh. Okay, so if it's just a halving and the ETF doesn't get approved, McLovin, then you're gonna look at like double whatever it is now at least, right? So like 80 to 100K, right? Just to keep things, just to maintain equilibrium, right? And that's if no additional supply, no additional demand happens, right? So just like anything else, you see the price, you see the scarcity of something halve, right? So your supply goes down in half in order to maintain, I guess in order to maintain the price. If the supply goes down by half and you have the same amount of people asking for that asset, the demand stays the same, then it's gonna go crazy. Yeah, new all-time high for sure. New all-time high, because that's not even taking into account any other demand, any other additional demand. We're only talking about the halving. Everything else is frozen, stays the same. No ETF, no additional institutions taking Bitcoin as a treasury reserve. No new countries taking Bitcoin as a treasury reserve. No actual companies like MicroStrategies, let's say like Apple decides that they have a lot of cash and they'd rather have that cash sitting in Bitcoin because it's going to make them more money than losing money as they're holding in cash. Once they realize that, right, barring all of that stuff, just happening, it's going to lower the available supply by half, right? So in order for those people that want that Bitcoin, they're gonna have to buy. They're gonna have to bid for that. They're gonna bid it up to if the demand stays the same, and everything I guess complies with the rules of supply and demand. Then half the supply. So then the price has to go up because you can't change anything else. That's the only thing that could change, right? Now on top of that, if you factor in the ETF, right, you're gonna have probably more than a doubling in the demand, right? So you have the demand, all the new demand coming in, and then you also have the halving. It's like you're getting hit on both sides, right? Like it's like the only thing that can go up is the price to adjust for those things, right? The price is gonna go up so high that it's gonna make some of those. It's gonna really test your commitment to being a lifetime holder. Yeah. Can you imagine Saudis go sailor mode times 1,000? Just it doesn't matter at that point, right? Like, what I'm thinking, the way I'm thinking about this, McLovin, is when you think about how much demand could come into the market all at once, right? I think they call it supply shock, right? Because the supply goes down, and then on top of that, the demand like more than doubles. You end up with a situation where you, instead of waiting for 2 or 3 halvings to happen, so 8 years, so 12 years to survive and hodl through and accumulate through 4 years, 8 years, 12 years, where you can expect, okay, yeah, after 4 years, after 8 years, I've been hodling for 4 years, 8 years, and guess, my Bitcoin stack is actually worth something significant now, right? I can start to consider maybe altering my lifestyle, working less, or doing something else I love, right? instead of waiting those 4, 8, 12 years, depending on how big your stack is, when these ETFs come out, or if Saudis go sailor mode and times 1,000, right? Anything like that you can't plan, that you can't really plan for or predict. It could basically teleport you through time into 15, 14 years from now, right? It's the equivalent of the demand is going to be so much that it's going to be the equivalent to waiting through 3 or 4 halvings in the span of, could be a day or a month or a year even, right? Would you get on a rocket ship that could take you 15, 14 years into your financial future? I would, right? That's what I'm doing now. That's the way I look at it. I'm saving as much as I can in Bitcoin. So when this mother lover leaves the station, when it blasts off into oblivion, when it blasts off outside the Milky Way, I'm going to basically save 10, 12, 13, 14 years of waiting for waiting, right, for that asset to appreciate, right, in the way I anticipated appreciating now. Everything else staying the same, and Bitcoin only being Bitcoin, and nobody else coming into the market for like no big things happening. Bitcoin is still going to continue to be more scarce every 4 years. Okay, that's a given. That's written in the code. Nobody can change that. The supply will be halved. The new release supply will be halved every 4 years, and every 4 years, that causes deflation in the supply, right? Basically, because coins are lost and there's less freely available coins to go around, so the price goes up because there's less supply, equal demand. The price will go up. Add in the demand, like we're saying, and again, you could be saving yourself, like that, like the meme from there's an Interstellar meme where they have the guy in the cockpit of the spaceship, and he's trying to like maneuver around this planet, and he says this little maneuver is going to save us 10 years. Hey, this little maneuver might save you 15 years in financial time, right? Imagine an NFL game and you only got like 1,000 beers for 70,000 people. The price of those beers are going to go way up. That's true. Very true. Do you have a beer? How many beers do you have, right? Shoot, better get them beers, because I'm telling you, it's wild. It's wild. Anyway, I hope you guys enjoyed this episode of the StackSats Show. Thanks for tuning in, guys. I appreciate every single one of you. Shout out to McLovin. Shout out to Hard Huddle in the house. Shout out to J Dub. Shout out to the Boise, Idaho local guidesman. Shout out to Leonard. What up, Leonard? Let's go. Round of applause from the live studio audience. I missed anybody? Shout out to Mr. Android. Thanks for tuning in. New subscriber, new watcher. If you guys haven't taken the time to go check out the interview with the Bitcoin Meister himself, Adam Meister, go check it out. It's pinned to the top of my channel. Adam is an awesome dude, and if you start listening to what he has to say, you're gonna get even more pumped to stack sats. And remember, if you ain't stacking, you're slacking.